Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, we're about 2 minutes away from the end of the trading day. I'm Scarlet Fu here with Katie Greifeld. We're counting you down to the closing bell. Here to help us take you beyond the bell with the global simulcast, Paul Sweeney and Mike Regan. And of course, in doing so, we bring together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And again, another day where things feel a little bit more placid, things feel a little bit calmer. We're all fixated on Fed speak, but it didn't really change the tone of the market too much today. Paul?
No, it didn't. You know, the last couple of days, we've seen some pretty solid trading volumes kind of coming in line with where they've been over the last 30 days or so. So no real movement there. Again, a lot of key economic data tomorrow, most notably getting some inflation data. And of course, that is key for this market because that is key for this Federal Reserve. So we're seeing some cautious buying right before we get that eco data, Mike. And tomorrow's going to be important. And we'll have full coverage, of course.
Yeah, you know what, Paul, I find interesting is, though, we've seen this strong momentum in the stock market recently, but hasn't really moved the needle on the bets in the short-term interest rate market about what the Fed is going to do. Fed fund futures still pricing in probably 2 rate cuts by the end of the year. I got to think they weren't listening to Neil Kashkari today at all. You know, he was saying basically, look, Fed has got to get inflation down, and we will. He's saying we're committed to that 2%. And even, Katie, when discussing the banks, he said it could take a while yet to get wholly through this bank crisis, and it's just unclear now whether there will be a credit crunch. So it's not like they're unaware of the bank issues. They're just laser focused, Katie, on that inflation story.
Well, I mean, we heard the same thing from Susan Collins, too, that there's more tightening to come, Scarlett.
Yeah, absolutely. All right, so 3 seconds to go, and there you have it. It's another gain in the books here for the major markets. The S&P 500 adding 0.6%, 4,050, which, by the way, matches the average year-end target among strategists that we surveyed for the S&P 500. How'd that work out? The Dow Industrials up by 0.4%, and the NASDAQ, the clear winner here, up by 0.75%, with the NASDAQ 100 firmly in bull market territory.
I wonder if we're not going to see those strategists, Scarlett, start to raise their forecast here, because as Mike was just talking about, if you look at the WIRP function, the market's pricing in discounts, and I learned not to fight the tape. So I wonder if that's going to bring some bulls out, and as we exit, or as we start the second quarter, Katie.
Well, we definitely had bulls out when it comes to the industry groups. You look up right at the top there. It's chips. Once again, that has been one of the enduring stories of this year. A lot of that powered by NVIDIA, just on a tear. You look down the list. You also have some retail up there as well, and real estate. Both of those industry groups up by over more than 1%. You go down, you have to go all the way down to the bottom to find some red. And if you're looking for red, look no further than the banks. That industry group off by about 1%.
Yeah, it's interesting. Good day for the techs, led the way again. We've got Amazon up, Apple up, as well as Microsoft. So some of those tech leaders leading the way, which goes back to a question I posed to a lot of fund managers is, tech led this bull market since the great financial crisis. It was a leader of the market. Can it once again attain that leadership position on the other side of this rate hiking session?
Yeah, Paul, on the downside, take a look at Match. This is a stock that's just been hammered over the last year, down about 80% from its record high in 2021, down about 4% today. Interesting story because they had a big pivot planned. They were going to introduce a Tinder coin, a cryptocurrency, to be used on Tinder, I guess, and they wanted to do dating in the metaverse. Well, they sort of scaled back all those plans late last year and early this year, and now if you look up their news, it's just shareholder lawsuit after shareholder lawsuit about what's going on with Tinder and why they scrapped those plans. Also on the downside, Charles Schwab down about 5%. Now, remember when all the discount brokerages eliminated commissions, that made Schwab basically very dependent on net interest margin like any other bank. And Morgan Stanley out with a note cutting their rating, analysts removing his buy rating on the stock for the first time since he began covering it 7 years ago. and it's all about that deposit flight. Schwab sweeps up uninvested cash, puts it into a sweep account. Customers of Schwab instead are taking that unused cash and putting it in money markets. Morgan Stanley flagging about $20 billion a month being lost from Schwab sweep accounts into money markets. And finally, we got to talk about these regional banks again. Another weak session. First Republic down 4%. Analysts really catching up with this stock. Piper Sandler reducing their target price for FRC First Republic from $145 to $15. Quite a reduction.
There you go. I'm still thinking about Tindercoin, but I'm going to try to power through right now, talk about the bond market. Let's look at some of the Treasury yields, which did nothing. Once again, boring is beautiful. For a second day, we've seen very little moves in either direction in the bond market. You can see 2-year yields. They rose 1 basis point down if you look at the 10-year, the 20-year, the 30-year. So it's interesting. Even though we saw this huge repricing, a lot of cuts priced in, you saw that hit the 2-year Treasury yield in particular over the past few weeks. Haven't really seen a lot of it taken out, at least if you look at absolute yield levels.
Yeah, and I just want to mention also Bed Bath & Beyond closing at a record low. The stock is now at 59 cents, so it feels like it's approaching that penny stock level. And of course, Bed Bath & Beyond warning of bankruptcy risk.
Right? There's not too much lower you can
I know,
get.
this is true. This is true.
Bed Bath & Below, am I right?
Yes. Oh, I
wow.
heard that. Well, I have a soft spot for Bed Bath & Beyond. It's from Union, New Jersey, which is a town over where I live. Flagship store right there. So it's been kind of bittersweet for us in that area.
I will
but boy,
say every memory I have in a Bed Bath & Beyond is positive, but I haven't been there since I went to college.
Carol Masser is screaming at the radio right now. She's not a fan. Yeah, she always gets lost, I think.
Well,
also right now, all the shelves are empty. When you were lost before, at least there are things to look at, but there's not anything left on the shelves because they haven't gotten their inventory right in so long.
Supply chains, they haunt us.
Also, just bad decision making overall.
That's true. But
not everything's supply chain anymore.
Yeah.
Looking ahead, there are a lot of Fed speakers today. You had Barkin, you had Collins, you had Kashkari. Tomorrow, there's even more. There's Williams, Cook, Waller, Messer, and Bullard.
Why?
I mean, why? Have they always spoken this much, Mike?
Well,
like
we're
they're
in between those quiet periods, so they're allowed to go out and speak, and we'll see if it's a mixed message. I mean, it seems like every one of them that gets up to the microphone sort of asserts this notion that, look, we're not planning on cutting rates. How many times do we have to tell you there's no plan to cut rates?
Exactly.
But you look at the futures market and
they obviously don't have access to the WIRP function on the Bloomberg terminal. But I go back to Christine Lagarde a couple of weeks ago with the ECB. They raised their lending rate 50 basis points, and her rhetoric was just as hard-nosed and hawkish as we hear from the U.S. Fed. So we'll see what the markets price in when we get that data tomorrow.
Well, we learned from reporting after the fact that ECB move, definitely the bank's credibility was behind that decision to some extent. Basically, they said that they were going to do this, so they felt that they needed to sort of not spook markets any more than they were spooked. So even though, we do have a lot of financial instability concerns, we know that these central bankers, they've worked hard to win that credibility when it comes to fighting inflation, and they do not want to lose it.
Also, I mean, it's the end of the quarter. We're not going to hear anything from companies just yet for a couple of weeks before they start pre-announcing. So in the meantime, everyone's fixated on what Fed officials have to say. But we have an entire month before, no, more than that, a month plus a couple of days before the next FOMC meeting. So there's going to be a lot to digest before the next FOMC meeting.
Katie just wants to know what it all means for Tindercoin. Is it,
What does it
bullish
mean?
for Tindercoin? But one thing that settled down, I got to say, that 2-year yield basically hasn't moved today, 4.10%.
It's a nice change.
Yeah, up less than 1 basis point. So up a little bit, but Paul, not like that 2-year volatility that we have been seeing. So that's good news, I think.
No, and Tom Keene is not here, so I want to go out with a Bitcoin quote here. We're sitting just below $28,000 on Bitcoin, down about 1.4% today. But boy, what a move crypto's had and Bitcoin really over the last several months. It's been one of the winners here in 2023.
Oh, big time. And what's interesting to me, I mean, outside of what's actually going on with the coins themselves, if you look at some of the crypto-linked equities, think some of those publicly listed crypto miners, for example, they're actually outperforming crypto itself, Bitcoin itself, even though a lot of those miners, we know that their margins have shrunk big time, because even though we're at 28,000, obviously that's not 69,000. It's not anywhere close to the all-time high. So we know that these companies, their business models have changed, and yet you would not know it by looking at the stock price.
That's so interesting, given how CFTC sued Binance and its CEO. The SEC also took action against another cryptocurrency company. Doesn't matter. People are looking for different ways to diversify, and they're finding it with crypto-adjacent companies.
That they are. Guys, this was sublime, but I have to say that does it for our cross-platform coverage of the market close on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. And a reminder that Bloomberg Business Week is now on Bloomberg Originals.
Yay!
We'll be back tomorrow, same time, same place.